Good morning, good afternoon, good evening, depending on where you are joining us today from. Welcome to Profinch Podcast, where we dive into the trends, ideas, and innovations shaping the future of finance. From banking to insurance, blockchain to payments and policy, if it's transforming the way money moves, we're talking about it. I'm AJ, and today we're unpacking insurance best practices. So let's get started.
Hi everyone, welcome to Profinch Talks, the podcast where we speak to SMEs and leaders from Profinch and the industry to understand some of the latest trends and industry perspectives. Today we are diving into a topic that's more critical and complex than ever, the fight against financial crime and the role that compliance plays. From sophisticated money laundering schemes to the rise of crypto-related risks. We're also seeing a shifting regulatory landscape and financial institutions facing a perfect storm of challenges, so to say. I'm thrilled to have with me today Ramachandran Ravi, our SME for Oracle's OFSAA's Financial Crime and Compliance Practice. Welcome, Ram, to the podcast. Before we get into the specifics, Ram, of financial crime and compliance, what is OFSAA, Ram? Can you explain this to everyone? And what is OFSAA's FCCM? And also, what are the key business challenges it solves for banks and financial institutions, Ram?
Thanks, Niranjan. So thanks for the introduction. So today we will be talking on the financial crime and compliance as well as the FCCM modules. I am also thrilled to talk about it. To answer to your question, OFSAA stands for Oracle Financial Services Analytical Applications, which encompasses of three things, which is enterprise risk management, enterprise pricing management, and the one which we are going to talk about, which is FCCM, nothing but financial crime and compliance management. This is a package which includes anti-money laundering, KYC or the know your customer screening, enterprise case management, transaction filtering, regulatory reporting, and a compliance studio. Also, this has a real-time fraud as well as a batch-based fraud detections as well. Now, what are the key business challenges that pushes the FCCM or any software like that is the first one is the regulatory pressure. So the regulators like the local regulators as well as the FATF, the EU, all of them are evolving as we see, and that evolution will see with the banks as well. So they want us to be robust and they want us to be ready for whatever regulations they are giving. Next is the operational inefficiency which we see nowadays. The number of false positives we see in the investigations as well as the SARS is too much on the higher side. So banks investigators also will have a certain number of false positives and they are trying to reduce the false positives. The same thing will be happening in the FIUs as well. So if bank is sending 100 false positives to the FIU, so imagine a country like India where we have thousands of banks. So all those banks are sending that many of false positives to the FIU to attend to. So it will be a burden for them as well. It's one of the key factors that pushes the solutions like FCCM in reducing the false positives as well. Third is the cross-channel risks. Money launderers or the financial crime enthusiasts have multiple channels to spread their operations. Like previously we had the bank which does only the banking. Now we have banks doing the retail, corporate, trade, brokerage, insurance, mutual funds, whatnot. So the money launderers also have got these many channels to venture into their business. The final thing is the cost of compliance, which the banks are pretty much concerned about. So banks needs to think about how they reduce the cost and how they do the implementation efficiently. Now SaaS or software as a service, or cloud-based installations are coming into limelight, which we will be talking in detail a little further. There are multiple ways the bank can pick and choose how they want to do the financial crime combating.
Thanks for detailing, Ram. And yes, we clearly see financial institutions facing pressures from multiple areas, right? And it's very hard to actually also put weightage to which area to focus more on. And a solution actually, which is holistic, is the need of the hour. Now, moving on, the financial crime landscape is also evolving, right? What are some of the emerging threats driving demand for solutions like FCCM, Ram?
There are two lenses to look into this question. So first one is the expanding scope of compliance. Initially, it was only the banks and the financial institutions who has to comply with these regulations on the financial crime. Now the regulators are expanding it and they want the insurance companies, real estate, casinos, precious stone dealers or jewelers and auto dealers to be brought under this canal. And these are called as the DNFBPs or designated non-financial business banking professions by the FATF. This DNFBPs already countries like UAE, Canada, and Australia have already put on the regulations. So now the other countries will follow this same model as well. Now the second thing is the landscape of the financial crime. There are multiple things happening there. So primarily now we have the fraud detection in line. So we are bringing in artificial intelligence and fraud detection so that we are getting the financial crimes or the frauds in real time in the fraud solutions. So Oracle FCCM also has a module which is taking care of the real time fraud detection in cards as well as wire transfers. So other than that, the Oracle FCCM's behavior detection framework also does the anomaly detection and peer grouping to identify and combat with the frauds. So this happens on the batch model. Moving on, so as we are talking about the scope of compliance being expanded to the DNFBPs, so we need also to take into consideration to develop the use cases or develop the typologies, what we call as how the typology is nothing but how these crimes has been conducted or the method in which the crimes has been conducted. So we have to, all these days we were concerned about only the banks, how people will come to the banks and conduct these kind of fraud or the financial crime or money laundering. Now we need to consider also the other typologies, like how people use the jeweler for that, how people will use the car dealers for that, how people use real estate for this. All this also has to be brought into the consideration and develop the software according to that. So that would be the next challenge what we are looking at. And so now we have the stablecoin, NFTs, and the other new payment methods or virtual currencies. That we can call it as a money laundering highways. So regulators are mandating the VASP. VASP stands for the Virtual Asset Service Providers, monitoring the VASPs and regulate them on that as well. So as of now, FCCM also have certain algorithms for this as well. Next is the digitization. So now we have with ISO 20022, we have the instant payments. So here what should happen is the filtering, this customer screening should happen in milliseconds and it should be close to the real time. So the Oracle FCCM's real-time transaction filtering is one of the best solutions which we can use to scan these kind of regulated payments like that. And finally, the banks should be adaptive to make the changes within a quick span of time. Like if FATF changes a rule, or if EU AML changes a rule, or US AML is coming up with new thresholds, the bank should be ready to do it in a jiffy, because otherwise if they cannot spend 6 months or 1 year to renew the systems to adapt with this. So they need to think about fast evolving changes.
With technology evolving, we're clearly also seeing the channels through which fraud is committed evolve, right? Now, there are many providers in the space, Ram. What makes Profinch's approach to FCCM unique? What's our secret sauce?
Good question. So our difference is going to be simple. So we are not just implementing the technology, so we are transforming the compliance. There are certain features that is going to make us unique. The first one is the customization. So every bank has different risk profile, different products, different geography, different ask from the regulator. So rather than implementing the out-of-the-box solution as it is, or out-of-the-box scenarios as it is, we need to tailor the FCCM as per the bank's requirements. So that would be the first point. And the second thing is our team consists of people who have a deep knowledge on the Oracle product as well as the deep understanding of the domain. Techno-functional people will make better implementation because they have the exposure to the domain as well as the product. So this makes the second point. The third point is the speed and agility. So we can deliver the full suite implementation in record timelines and fixing all the inefficiencies which have been left behind. So this is possible only if we have the correct team of the domain and the tool expertise. So that is how the point number 2 and 3 are linked. So we have the correct people who can get the requirements from the customer and talk about the regulatory framework and also talk about the OFSAA framework. So this makes our proposition unique. And talking about as a partner. So we were one of the first partners who had implemented the FCCM Compliance Studio. This FCCM Compliance Studio helps the customers fine-tune the thresholds and reduce false positives by a great extent. Also, we were one of the first partners to implement the cloud model, the SaaS framework. So we did it for an Australian client, and we were also one of the first partners who implemented the investigation hub. So obviously, whenever we are getting a new product, a new technology, we make sure that we are getting into it and we are implementing it, and we are the pioneers on that. So this will make Profinch a unique go-to partner for the Oracle. Again, whether it is going to be the whatever core banking solution it is, whether it be T24 or FlexCube or Finacle, so we have the experts who can connect the core banking solution into the FCCM. And also, other than banking, we have also dealt with the insurance claims as well. And finally, the post-go-live managed services, the continuous tuning of the systems, and then doing the OFSAA upgrades, and then regulatory updates or adding scenarios, that will be coming under the managed services. And we have been doing it for the multiple clients. Whomsoever we have did the implementation, we are also doing the managed services as well. So to put in 3 words, our secret sauce will be speed, precision, and sustainability.
Thanks, Ram. I think over years, the trust of customers towards Profinch's OFSAA's offerings has increased, and our coverage and expertise also clearly has kept pace with a lot of the customers' demands. Now, my next question would be, could you please share a few success stories that highlight our work with some of our customers, Ram? Yeah.
Sure, of course, without naming the clients. So one of the African banks, we were chosen as an implementation partner to implement the complete FCCM suite, including the Compliance Studio. So this particular bank operates almost in 13 countries in Africa, and they have around 700 banks in Nigeria itself. So this is a work in progress project, and we have implemented a few of countries we have already implemented, and the others are in pipeline. So this was the one I'm talking about, the Compliance Studio that we implemented. So we are the first partner to implement the FCCM Studio here. And there is one more wealth management firm in Australia. So we have developed an advanced AML and investigation framework using the cloud-based investigation hub. As I said, this was again one of the first cloud-based implementations of Oracle that we partner did. This actually brought down a lot of the false positives in the suspicious activity. And there is one, talking about the Asian side, so there is one major bank in Myanmar. So in this particular bank has chosen Oracle FCCM for improving the efficiency of the current fraud management systems. So we were chosen as a partner to implement the fraud management system. So here we had delivered around 50 plus tailored fraud transaction monitoring scenarios, leading to a significant drop in the undetected fraudulent activity and enhancing the compliance with the local as well as the global regulators. Another example from Africa. So this is one of the Nigerian bank. So in its quest for the growth, an upcoming Nigerian bank was eager in building their muscle for their compliance against various fronts as well as risk management. So here, this particular bank chose us to implement multiple OFSAA modules, which included AML, KYC, transaction filtering, and the customer screening. This was complete, and the bank has significantly reduced the supervisory findings as well as the whatever flaws there were found during the inspections. Outcome of this is again fewer false positives, faster investigations, and stronger regulatory confidence. We have multiple examples or multiple success stories across the world. Probably that will take some more time to talk about that.
Thanks, Ram. That's clearly a lot of work being done. Now let's do a bit of future gazing, right? Looking ahead, say 3 to 5 years from now, what shifts do you see in the compliance and financial crime management space, Ram?
So, Niranjan, talking about the shift, we are on the cusp of a big shift. The first shift, what we see is the convergence of the AML and fraud. Previously, there used to be different systems, one for the AML, one for the fraud, different silos, and put together and sometimes try to stitch it, which won't even happen. So here we want a unified surveillance across the fraud, the anti-money laundering, in cyber fraud, sanctions, everything put together. So there will be a single system which will maintain all the subsections of the financial crime within a single warehouse and a single system. So this gives us a proactive identification and mitigation of emerging risks and real-time adaptive risk scoring and behavior anomaly detection. So what happens is, so previously when we talk about silos as well, previously banks, what they used to have is the money laundering solutions will be split across different LOBs. The loans operations will have a separate systems. The retail banking will have separate systems. So what happens is, if you don't have a unified system for this, the same customer is having, for example, a loan account as well as a bank account, and we want to identify his pattern of transactions, whatever he's doing, and to form, or rather we want to form an entire behavior of how he is behaving across the products, what products he's using on what months and what point of time, what is his spend, what is his income. This won't be possible unless and until you have everything in a single place. So this is the reason why, even though bank has multiple businesses, they should have a single system which can cater the needs of all the financial crime related reports as well as the regulatory compliances. And previously also we were talking about the real-time compliance against the instant payments. So that will become a new norm. We need to do the compliance or the fraud monitoring near to the real time. That would be the requirement. Every bank or every financial institution should also take care of the global standardization. So that is something which again we need to work on. The banks will need the systems that will work seamlessly across the borders. Finally, there will be more need for the cloud native ecosystems. So more institutions, even small banks, and we have talked about the non-banking professionals or non-banking professionals who need the financial crime monitoring. So the cloud native ecosystems will be a game changer here. And specifically for the Oracle FCCM, the FCCM will make a paradigm shift here. The focus will be more on the SaaS product. The SaaS will be the lightweight for the banks. Sometimes you see the smaller banks or credit unions or insurance companies or real estate, those people cannot procure the license for the on-prem, and they might need a server for that. And for the servers, they might need people who can monitor the servers, and then a person to do a database tuning, those things. Rather, they will choose to go with a SaaS model, wherein they can upscale or downscale at any point of time. So today they have 1,000 transactions. The next year they say that they have around 1 million transactions. They need to upscale the number of users. Or say, for example, a bank needs to downscale because they have sold their part of their business to some other bank. In that case, they will be able to downscale as well. So now the FCCM will be a game changer here, where they will make this financial crime combating or financial crime regulations accessible to each and every small institutions possible.
Thanks, Ram. Clearly, we can expect more standardizations as I see it. And what's interesting to see is fraud and AML somewhere converging, right? That will be interesting. And moving on, Ram, if a bank is just starting its FCCM modernization journey, what's your advice to them?
My advice is pretty much simple. So don't see the FCCM modernization as a IT project. It's a strategic transformation. So to start with the basics, data is going to be the king. 80% of the success comes from clean, structured, and mapped data. The first point where you go to modernization, so first thing is to cleanse the data and make it clear. The second is the business-driven design. Obviously, I was even talking about previously as well when we talk about the customization. So the scenarios or scenario tuning is being driven by the business. Ideally, it should be aligning more to the need of the business, and the business, obviously, they will be catering all this according to the regulatory requirements. So this should be a business-driven design. And next is the scalability. So while we are building the solution, we are not building the solution for today. So we are building the solution for the next 10 years or so. So we should be able to cater the needs of the evolving regulations as well as evolving products. So at any point of time, before we do the FCCM modernization journey, we should have the as is state. So as is, whatever the problems we are facing, is it because of the false positive reduction, or is it because of the system inefficiency, or what? There should be some or the other reason why we are upgrading it. So we should be keeping the reason with us, and we should be able to find the root cause and eliminate the root cause. If it is false positives, obviously we are going to do the scenario tuning. If it is something else, we have to find out what it is and probably address it. That is the first thing for us. The next thing is training and alignment. So we should be investing in people, bringing all the stakeholders on board early and then train them. Then bringing the stakeholders will also bring more data to us. Ideally, the stakeholders must be from different LOBs. So we might know what are the pain points for each LOB, and this modernization journey should ideally help them, each and every LOB, in using the FCCM system efficiently. Finally, choosing the right partner is a key here when you do the FCCM modernization. So somebody who has a global compliance expertise, not just the local knowledge, because your bank might be a local bank, but the customers and the transactions are coming from global. So ideally, the global expertise is pretty much needed, and sometimes there's certain jurisdictions like EU that needs a global journey to be done. And the last thing is planning beyond the go live. So this compliance is a journey, so we need to make sure of keeping upgrading. So we are planning a go live now, so we should also plan for what is the next upgrades and what are the changes we are trying to doing in the next upgrades. So this go live, probably we might have certain tunings or certain scenarios left unplanned. So those should be your next target. So this is going to be a journey. So at the end of the day, this FCCM modernization is not just about ticking the regulatory boxes. It's about earning the regulator trust, improving the efficiency, and building a future-ready compliance.
Great, Ram. Thanks a lot. That was really helpful, and I hope the listeners of this podcast find the content interesting. Let's speak again where we get into some regional nuances, discussing compliance that is more region-specific. And to all our listeners, thank you for listening to our podcast. Please do follow us on LinkedIn to get more updates on news and events related to Profinch. See you all soon. Thank you.